healthcare and healthcare reform and all of that good stuff. Hey, we've got 3 great reports for you. Plus we have a 4th one I didn't bother to print out. I'm saving a tree. But these I printed out because I wanted to read through and make sure they were correct and what I wanted. The healthcare reform one, I know like the back of my hand, so I didn't have to print that one out. But you can just call and ask for these. We'll mail them to you. We'll email them to you, however you'd like them. Here's the deal. Before you can understand, before you can get control of your cost for healthcare, you got to understand it. So we have a whole report on the importance of understanding and educating both you, your employees, your family members, what drives healthcare cost and what you can do about them. We put together another report, which was how to take control of the rising cost of healthcare. We'd love to share this with you. This is really more appropriate for business owners and such, but anyone can learn from there. And then we put together this one. Sorry, I'm talking quick. Someone said my videos go too long, so I'm trying to cut them back a little bit. But this one, how to communicate with your employees, how to help them with open enrollment. It's a whole report on what needs to be done, how it should be done in communications. So it's one thing for you as a business owner to understand it. It's another thing you got to get your employees to understand it. And here's why. I'm going to give you a very, well, at least simple in my mind. Hopefully you'll be with me. Here's what you pay for your health care right now, for your insurance. And here's what your risk is. There's a gap between your risk and what you pay. And I'm going to use my thumb to represent the insurance companies. A lot of good reasons to do that. The brunt of many jokes. But anyway, bottom line is the insurance companies, that's their profit. So if you just go out and you say to an insurance broker like us and you say, hey, I want a lower rate, and we lower the rate, you violated that gap and there's no profit for the insurance companies. So what happens is you can even go here below what your risk is, and then what will happen is your loss ratio, how many losses you have, your actual risk is greater than what you're paying in premiums. So the insurance companies, to make it up, they'll slingshot you up here, not to where you were, but way up here. They'll actually raise your rates higher than you were even paying before because they got to make up for what they've lost on you. Now, I've been doing this for 33 years, so I don't believe the insurance companies ever lose really, but they at least get a good story and they can back it up with math, and that's how they justify these rate increases. Anyway, we can't control that either, but what we can control is an understanding of this, is your health insurance renews in 30, 60, 90 days, and all of a sudden you're looking at it and you contact 5 or 6 brokers, and we're all working over here on this rate trying to push it down as best we can. Here's the problem. Really what you want to do is you got to work on the risk. You got to work on the frequency, how often someone's going to the doctor. You got to educate your employees about using maybe prescription cards or a standalone prescription service, because frequency, how often you go to the doctor, unfortunately leads to severity, how bad it is. So what happens is what we really want to do is we want to push your rates down, but we want to do it in a manner so your rates stay lower. The only way to do that is to understand this thumb of a gap, the insurance company's profit, and we have to reduce your risk. As your risk reduces, then your rates will come down. There's a lot of moving parts to that. This video is not designed to explain how we do it all. It's just that we do it. We have to push your risk down, and we have all kinds of things set up to help you do that and help you reduce your risk and help you take control of your health care. Here's another thing that we do, and I mentioned to you the surveys in there. Just ask yourself when the last time your current broker used the word benchmark. Benchmarking is, okay, here's who you are compared to another group just like you or other groups of your size, similar demographics and such. Here's what they're doing, here's what you're doing, okay? And then looked back 5 years at your claim history, got to here, and then forecasting. So 2 words, benchmarking and forecasting, because here's the deal. If we understand that this is your risk and this is your premium, and we can see your claims history evolve, we know this. I can then say, look, based on your rate increases that you've been having, been going like that, if we now can turn the corner and bring your risk down, we can forecast. We've got to forecast using that margin. I keep my hands up. There's that margin right there in between your actual risk and losses and what you're paying. We have to maintain that gap because the insurance companies won't do this for free. They got to make a profit, and all we have to do is understand it. Now, whether you agree with them making a profit or not, that's all political. I think insurance companies make too much money in general. That's fine. But that all being said, we don't make the rules. We just got to learn to play within their sandbox. So we got to reduce your risk. Anyway, that's what we'd like to talk to you about. These reports that we have and such, these are templates. We pull them off of our service that we have. We tweak them a little bit in general To make them meaningful, we have to take your company's experience, benchmark it, compare it, and forecast it. I look forward to hearing from you. Call your GDI broker, because we actually do care more about your healthcare, about your employees' healthcare, and we are the healthcare experts in our area. And in fact, as we do business across the country, I would have to say, based on what we see, again, it's up to you. You tell me, is your broker talking about these things? It's a lot of work, but it's the only way we know to manage it. By the way, let's think about this. One parting thought. Human resources is the foundation for any meaningful change in your business. A wellness plan allows us to communicate human resource objectives and company objectives as well as wellness. All of that supports your employee benefits. Your employee benefits, those three things, then support your safety culture, which support and help reduce the cost of your workman's comp. 5 things are employee benefits, not just one. If it's only presented as one, your employee benefits is health insurance and dental, you're missing the boat. It starts with good HR, that's how we take control, wellness, employee benefits, OSHA compliant safety programs, all to help control workman's comp cost also. It's a 2-for-1 deal. Workman's comp cost and employee benefits cost all managed the same way by your GDI broker. And we've created the system of fulfillment. We have all the pieces moving. A lot of people can talk the game, but we can walk the walk. We look forward to helping you take control of your total cost of risk, helping you lower your costs, and help you know what they're going to be even next year. When we start forecasting, we can tell you the margins and what the trends are too. All of that's in these free reports, but more importantly, you don't need to read them. You just need to call us, and we're here to help. Hey, thank you so much for all your time today. Bye-bye.